All right, y'all. I want to talk about how to stop losing. This is very important because a lot of times we focus on how to win, how to find good trade setups. And don't get me wrong, that's very important. In fact, it's half of it when it comes to, winning trades and not losing is finding the good winning trade setups. But it's good oftentimes to approach the topic from the other end, from the losing end. And so today I'm going to walk you through step by step how to stop losing trades, get your account under control, and start becoming more profitable right away just by implementing these steps. Make sure y'all to like the video, make sure to subscribe to the channel if you enjoy this kind of content. I do trading tutorials, giving advice, which is not financial advice, but just advice in general, entertainment purposes about technical analysis, trading tutorials, different trading strategies, and stuff like that. Okay, let's get right into it. So the first thing, guys, is stop gambling. And I know this seems obvious, but a lot of people gamble when they trade. There's a lot of different ways that gambling can manifest itself. One of the most tempting ways to gamble is if you see what you think is a good trade setup, you put 100% of your capital on a trade, or even 50%. I shouldn't say you put, I should say you risk, okay? You risk too much capital per trade. That is essentially gambling. It's gambling. Let's say, and this happens to a lot of people, especially newer traders, but it can even happen to experienced traders, where you enter a long, let's say right here. Okay, this was actually a long trade that I did enter from right here. And I longed it all the way up. It was a very juicy trade. And this was a trade that I posted in my VIP Discord right over here. I wanted to see us basically swing failure this low, come into the golden pocket and get a bounce to the upside. That's exactly what happened, okay? And so I won the trade. It was a wonderful trade, right? Now, what may happen to people when you get the high of finding a trade setup, executing it properly, and let's say for this trade I was using good risk management. I'm risking 1% of my total capital, maybe 2-3% of my total capital. And then I get overconfident and I get greedy. I get addicted to that dopamine high. And the next time I see price come back down to that level, I'm like, ooh, I'm going to long again. But this time, instead of putting a proper, responsible amount of capital that I'm risking, I'm going to go ahead and just slide that Bybit slider all the way up to, maybe I'm going to put half my total capital on the trade. And you do this without thinking, you do this without a plan, and then what happens is price starts to come up, but then price starts to come down. And then you find yourself in drawdown. And now you're in a position where literally you have to gamble. I get messages from people all the time saying, Jason, I longed up here. What do I do? All right, this is another thing that happens to people. They enter a long trade, they close out the long trade, price keeps coming up, and then they FOMO back in. And this time, instead of being responsible and thinking it through, they just risk tons of their capital, longing the top, price starts to come down. Jason, what do I do? Do I add more margin to my trade to avoid liquidation? Do I wait for price to come back up? Where do you think price is going to go? The truth is, guys, we can't answer those questions. And if you're entering into a trade without using proper risk management, if you're entering into a trade out of FOMO, if you're entering into a trade without a plan, then you're gambling. And we have to remember that trading is a business. We need to have a properly thought out plan in advance before entering or exiting a trade. We should never be in a position during a trade where we don't know what to do. If you find yourself entering a trade and not knowing what to do, you are gambling. And so what you do need to do is move on to step number 2, which is you need a very clear strategy. Okay? It could be more than one. I use many strategies, but you need to find some strategies and back test them. Okay? For example, one of my favorite trading strategies is trading just on the 1 hour time frame, bearish divergences on Market Cipher B. Now, yesterday, I entered into a really nice short position because as I was giving my TA in the VIP Discord, we can see here that we had these highs around 48.8K, and I was saying to myself, we get a really nice fake out and then swing failure of those highs with bearish divergences on the 4 hour and down, and that could be very juicy. And if we come over to the 4 hour time frame and we just zoom out, we can see here are the highs at 48.8K. What did we do? We came up above those highs, and what did we see on Market Cipher? We saw a very clear, if I can get my trend line, we saw a very clear bearish divergence on the 4-hour time frame, right? Where the momentum was coming down as the price was coming up. We saw it on the 2-hour time frame very clearly, and also on the 1-hour time frame very, very clearly as we're coming up to those highs. And so this, for me, was absolutely a short. And yeah, that was super dang juicy. I mean, let's see here. That was a very juicy short, extremely juicy. Of course, guys, I'm using leverage for these trades. That's how people ask me, how do you get such high percentages? It's because I am leveraging my capital to earn more on my margin than if I was using lower leverage. Okay, so leverage is another. So speaking of not gambling, you need to know what you're doing if you're going to be leveraging your capital. You need to really know what you're doing, and you need to have your risk management down, because you can use leverage in a way that actually lowers your risk. But you have to know what you're doing. Okay, so yeah, I had two very clear strategies to basically long this and short this. And here's something else. Speaking of not gambling, if you don't have a setup, if you don't have a plan, stay out of the markets. Very important. If you don't have a plan, stay out of the markets, because if you're entering a trade without a plan, you're gambling. You need to have a clear plan. You can see in both instances, in both trades that I entered, I had a very, very clear plan that I had in advance, right? The long trade, for example, I had the setup in advance. I knew what I was looking for. The short trade, I had it in advance, exactly what I was looking for. I wanted to see us come above that level. I wanted to see us get bearish divergences on the 4-hour time frame and down. So when I entered the trade, there was no gambling here. I knew what I was looking for. I knew why I was entering the trade. So you need to come up with a strategy, and then you need to back test that strategy. One of a great strategies is just divergences on the 1-hour time frame on Market Cipher B. A divergence is where price makes a lower low and momentum makes a higher low. That is a bullish divergence. Look at this right here, bullish divergence. Boom, massive move to the upside. That trade is a long trade. I'm still currently in. It's up about 600% right now. I'm still in the trade. And then again, yesterday we had the bearish divergence on Market Cipher B on the 1-hour time frame, where price made a higher high and momentum makes a lower high. And that is the short that I'm currently in right now. And so let's just say you're focusing on this strategy and you tell yourself, okay, I am not going to enter a trade unless I see my confirmations on Market Cipher. Okay, unless I see my confirmations, I am not going to enter a trade. And then you back test this strategy and you go back in time and you find every time there was a bullish or bearish divergence on the 1-hour time frame, maybe you're looking on the 4-hour time frame, whatever time frame you want to trade, go back and see whenever there was a divergence, back test it and see how much profit could you have made. Take that measuring tool and see, okay, I could have made 6% here, I could have made 3% there, I could have made 5% here, I could have made 10% here, right? That's what we want to do. Look at this divergence back here. We could see we're coming down. We could see momentum coming up. And go back and back test this. And then what you can do is keep a spreadsheet and maybe go back and find the last 100 times it happened, right? And let's say out of the last 100 times this happened, 80 of those trades were wins, 20 were losses. Now you know you have a strategy with an 80% win rate. And you are deciding, I'm only going to enter a trade using my strategy. And I know it's a good strategy because I've back tested it. So now what you've done is you're not gambling, but you are actually sticking to something that you have tested, that you put in the work to know this is something historically that has a high probability of winning. And I'm only going to enter a trade if my strategy meets the confirmations. Now, if you want to know about technical analysis and how I mark up my charts like this, and I get these key levels where I'm looking to trade, where I can find in advance these areas where I know what I'm looking for, then check out jasonkaspertrading.com, because this course will walk you through step by step the knowledge and the skills you need to become a more confident, more profitable trader. Because when it comes to trading, technical analysis is very important if you want to find those juicy setups. And this will walk you through all the TA you need to know. This is literally changing the way thousands of people approach the markets. We go through, assuming you've never even looked at a chart before, technical analysis, mindset, how to use TradingView, how to use an exchange, how to use Market Cipher, how to have a stop loss, how to enter a trade. We go through 6 different strategies that I already use that have been back tested already by myself and many others that are profitable. And then we go over risk management. This is very important. I'm going to get into this later in the video. Risk management is a way where even if you're taking losses, because losses are inevitable, you can still be profitable over time because you're not risking an amount of capital that will actually set you back. Okay, that's very important. There's currently a 30% discount in the description of this video for a limited time. I'm going to revamp this whole course very soon, but for right now, this is the chance to get it at a discount. Okay, and also if you purchase the course now, you'll have access to all future course materials, just so you know. Also, if you do want to join the VIP Discord, where I post my levels, where I post my potential trade setups, for Bitcoin, I do it for Ethereum. I do it for altcoins as well. XRP, Cardano. We've been trading SOL. Yeah, SOL, man. Some really juicy trades in here. We literally shorted the top of SOL. It was like $1 lower than the top. It's pretty juicy. But anyway, you can access this by going to patreon.com/Jason Casper. We're actually in this Ripple short right now because of this trade setup that we found in advance during a VIP live stream. Okay, enough of that. I'm digressing. So step 3 for not losing is stick to your plan and don't FOMO. Okay, a lot of times you might come to the charts and there's no trade. There's no trade for you to take. Okay, that's very possible. Right, you might come to the charts and see, oh, there's no trade for me to take today. So now you have 2 options. You can either trade another asset, or you could just say, you know what, I'm not going to enter a trade today because my plan, my strategy is the criteria have not been met for me to enter a trade. So I'm going to sit out. It's not a big deal. Why is it not a big deal? Because the markets will always be there. The markets will be there tomorrow. They'll be there next week. The trading opportunities will always be there. They will always be there. I promise you, they will always be there. Right now, you know, I'm in the short still. I've taken a large amount of profit out. About half of the position has been taken out down at these lows here. You know, my stop loss is up here somewhere. Right now, I personally don't see a trade to enter, so I'm not going to enter a Bitcoin trade. I'm looking at other assets. I'm planning in advance. That's another thing you can do if you're sticking to your plan. If you don't see a trade set up, take the time to do your technical analysis. Maybe go look at another asset and plan out where your next trade is going to be, right? For example, you know, I was looking at AVAX a while ago when we were still in this triangle, and I'm like, all right, if we break the triangle, where would I like to short from? We had 2 major areas where I would like to short from, actually technically 3 major areas, and, you know, look at that. So, you know, we're planning things out in advance, looking for our strategy, and we do reject perfectly right off this golden pocket / value area high. So if there's no trade for you to take, don't FOMO. I'm not going to FOMO long right now because Bitcoin's pumping. I'm not. I'm going to wait for a good setup. Which brings us to part 4, okay, risk management. This is very important. We have to understand that losses will always happen. And because losses will always happen, we need to mitigate our risk as much as possible. What does that mean? It means for every trade we enter, the total amount that we are risking needs to be low. I would say between 1 and 5% of your trading account. If you're newer to trading, I would not risk more than 1%. If you're more experienced, perhaps 3 to 5%. Okay? 3 to 5% if you're more experienced. But if you're new, I would not be risking more than 1% of your capital per trade. Now, this doesn't mean you're putting 1% on your trade. That means you're risking 1%. That means if you're going to long, okay, let's say you're going to long right here, you need to make sure that your stop loss is not any greater than 1%, okay? And there's many different ways to do risk management. You can use leverage to use risk management. Higher leverage will allow you to risk less capital while putting more contracts on the trade, a very powerful tool. If you have good technical analysis skills, you can use higher leverage and risk very little amount of money and have very successful trades, okay? If you're newer to trading and you are not as good at technical analysis, then I recommend using lower leverage for your trades. And remember, it's not about how much you're putting on the trade, it's how much you're risking. So if I'm entering a trade here and my stop loss just so happens to be 0.5%, I could 2x leverage my entire account, put 100% of my capital on the trade, and if I get stopped out, I'm still only losing 1%, right? If for somehow I get a really juicy entry and I can put my stop loss, a responsible stop loss, at 0.25%, now I could 4x leverage my whole account and still only risk losing 1% if I get stopped out, okay? If we're using leverage, let's say, right? This is what I like to do, and people see me using super high leverage. The reason I'm using super high leverage is because I'm only risking 1% of my total account, okay? Usually 1 to 2% of my total account, yet I am leveraging a small amount of capital. I'm taking that 1%. Let's say we have $1,000 in our account, right? We have $1,000 in our account. 1% of 1,000 is $10, right? $10. Now, this means the most I am willing to risk is $10. I don't want to risk any more than $10, but what I can do is I can leverage this $10. Maybe I'm using 25x leverage, right? So now I can put $250 on my trade, which is 25% of my total capital, but I'm risking, if I get liquidated, I'm only risking that $10. Okay, sometimes I do even higher, times 50x leverage, which means I can put $500 on the trade. I can put half of my total capital on the trade. If I get liquidated, I'm only losing 1%, right? Because all leverage does is it allows your margin to stay low while your contract number can go high, okay? For more information on this, check out the course at jasoncaspertrading.com, where we go over risk management and all the strategies I use to keep risk low while still making decent amount of money on the trade. Okay, risk management, losses will happen. If you can make sure that you are not losing money, you will then have money to make money, because if you squander away your capital by risking too much, I guarantee you will blow your account. Here's why. Let's say you have $1,000. If you lose 20% of $1,000, right, you just lost $200. So you lost $200. Now you only have $800 left, right? Let's say now, okay, you make back your 20%. If you make back your 20%, 800 times 20%, now you've only made back $160. So instead of earning back your total, what you started with, now you only have $960, even after losing 20% and then gaining back the 20%. Now, it's very unlikely if you lose your 20% that you'll be able to make it back in one trade, because a lot of times when people lose large amounts of money trading, it's because they're not sticking to step number 1, they're not sticking to step number 2, they're not sticking to step number 3, and because they're not sticking to these 3 steps, it makes it very difficult to follow step number 4 if you're gambling and not sticking to a strategy. So people usually blow large amounts of money in one trade, and then they're like, all right, I'll be good and I'll trade the right way. And if you're trading the right way, it's rare that you will be able to make this back super quick. I mean, it can totally happen, don't get me wrong, but is it probable that your very next scalp trade is going to earn you back that 20% that you lost? It's not very probable. And even if it does happen, you're still not at break even, you're still in the red. But if you're losing 1% at a time, all it takes is one good trade to make back multiple losses and then be in profit. So guys, that's it. How to stop losing trades. It in principle is very simple. Okay, in principle it is very simple, but it's hard to do it psychologically. So if you're having trouble, you need to really discipline yourself. You really need to discipline yourself. You need to approach this as a business. You need to approach this as a career. You need to systematize this. Because if this is something that you actually want to do and not just ride the hype and not just long in the bull market, you need to learn what you're doing. You need to stick to these principles. All right, guys. That's it for this video today. May God bless all of you. Make sure to like the video. Make sure to subscribe to the channel. And make sure to click the bell icon to get notifications. All right, y'all. God bless. Peace.